You see what it's done now? It's done exactly what we said it would do. But one, we didn't stay in when we should have stayed in. We should have stayed in a bit longer. And two, I think we came in a bit early. Right, let's have a look at this one here coming up. You can see we're getting a signal that's coming up now, real time. Because some of these signals, people say, oh, signals retrace and repaint and stuff like that. But this one here is we wait for the close. So if it comes up after the close, then we know that is a signal. The only thing I do not like about this signal is the fact that it's dropped 50 points already and we got an earlier signal. This is the signal really I really would like. But as my policy, the way I do things, I do not like to take a trade before a certain time. I do not like to take a trade before a certain time. That is because experience has taught me that there are less opportunities for that to become true. So this one's quite a risk unless it goes up a bit. I'd prefer for this here to not be a signal, right? So it not to become a signal and for it to rise up a bit and then give me another signal around here. Then I'll be more happy to take it because at the moment it's 38 points there. The bottom is 50 points. It's a bit much. And also, if I get a signal here, where is my stop? Where's the stop? The stop, is it going to be all the way up here? 38 point stop? No, it doesn't. There's no. You have to have all the elements. It's not just, oh, you get a signal and then let's just take that signal. I'm so glad, look, the signal didn't turn up, look. It did not give me a signal. Hopefully, let's go. I want it to go up here, like I said, I want it to rise a bit. Then give me a signal. At least if it rises up here, we can put a stop above these moving averages or above this peak here. Do you see what I mean? Because ideally this would have been it, but this happened at 7:20. That's too early for me. Not because it's too early in the day, it's just too early. The session, as far as I'm concerned, is not ready for a lot of movement. It does happen on occasions, but it doesn't happen all the time. Okay, in saying that, let's just have a look. I want to show you the sessions. So let's come out of this and then take these scroll buttons off. Hold on a minute. What's going on there? It seems to be coming back. Well, we've got 21%. We've got 21%. Just look on that. So we'll wait on there. While we're waiting, let's just have a look at the sessions. Look, here's one. If you can see, let's have a look here. Can I get in there? This is the session, 8 o'clock. We get a couple of signals before it, but on 8 o'clock we get a decent signal. These signals are there, but they didn't come down that far. So we get one here, and that's a decent return on that. Let's see where else we've marked it here as well. Here, there's a few signals, but there's no real signal after 8 until we get this one, which is a switch. You get that's a failed signal. Then you take this signal and it will go there, so you can get your money back on that one there. That will work. Another one, no signal. No signal at 8 o'clock until after 8. Then you get your signal. Signals are indicated by dark red or dark blue candles. Let's have a look here. There's a signal here. That's a nice signal. Goes up. Decent signal. 8 o'clock, no signal at all until later. 8 o'clock here. You get a few signals before 8, but they just go on the right. They just go on the same path as that 8 o'clock. So that's fine. This one here, no signal until after 8, so there's no problem there. We've got 63%. Let's have a look again. No signal again, so it's no problem. Signal after 8, so there's a signal and it goes down. This one here, you've got a signal before, which shows you that sometimes you see how weak it is. The signal, if you get a signal before 8, it sometimes works, but it doesn't carry on, if you get what I'm saying. It's just something that I don't really do, but these signals seem to be all right. This signal at 7:30, it gives you a 1-to-1. You get your money back on it, just about, but it does come. If you put your stop there, 13 points, 14 points, you get your money back. You get a 1-to-1 on these signals. I know people don't like 1-to-1s, but I do. I like them. They work. This is bang on 8 o'clock. It goes down. It's brilliant. It seems like these signals, a lot of them are just functioning correctly. You get a signal before 8. Look, that one doesn't work. Well, technically it does work. No, it doesn't. Because you get spiked out here. Look, see that spike? So if you put your stop below here at 28 points, you're not getting your 28 points. And if you put your stop here, you're getting stopped out. So that doesn't work. But then afterwards, you get your decent money. Now let's get back. 97. Let's scroll back to the front, see what's happening. Oh, look. The signal went again. So there's no signal. It was threatening, but nothing. So I think it knows what it's done. It took the money before before I could get to it. Before the open of the LSE. Before the open of the LSE, it done a little run, took 40 points out of the market, and it's settled down. But hopefully, what's happened now, this is what I'm hoping is going to happen, is that people have noticed this nice downward trend, right? And they've cashed in, they've come in to this market around, let's say, they've come in around this one here or this one here. They've come in late here or here. I would prefer for this to, like I said, go up about here, right? And then give a signal. So it's almost like using this as a ceiling and then give a signal. But I don't know if it's going to do that because it's showing us, it's threatening to give another signal again. So really and truly, I'm not too sure about this one. I'm not too sure because it looks like it's just gonna give a signal, and that signal to me, I cannot see where I'm going to put my stop unless I put it just above the signal. 12 points. You know, it's based, like I said, I don't like coming in late. There's a bit of money on the table, but I don't like it. I like to do it how I do it. And I do not like to be tempted to do it in a way that I don't want to do it. Because if it does go wrong, I'll be just kicking myself, telling myself, I told you not to do it. It's not the right way. So I like the moons to align. The moons are not aligned here. They're all right, but they're not aligned. I don't like it. So I won't trade it. I won't trade it unless it comes up here, right? Gives me a signal, then I will trade it. It's almost like giving us a second chance here. This is not a second chance. As far as I'm concerned, it's gone. And now look at the length of this cable with this candle. Look at it. It's becoming a bit too long as well. Okay, it's only 14 points, but I'm talking about relatively. relatively to the rest of them here, it's a bit too large for me to start investing, because the money is going in this candle. The movement is actually happening in this one candle, which is my profit basically. So I prefer for it to bounce off this low, go up, give us a signal around here, and come back down. Or better still, give us a signal the other way around. Let's have a look at the hourly chart. We got 68% left on this candle. The hourly chart is showing us beautiful downward trend. And look, if you look at the hourly, we're getting a signal on the hourly as well. Which the hourly for me, it doesn't, the signals are very controversial as far as I'm concerned, because on the hourly they give you large candles, and sometimes they're just not as good. The stop, where you put the stop is a difficult thing. Hold on, let's get back to that one, because let's have a look. We got 86%. Yeah, I'm not, it's probably going to give us a signal, but I can't be doing that. I can't be doing that. Look at this. Look at this. Look at this candle. This is 8:30 GMT. Obviously, there's some sort of news that came out. Look at that. Two massive candles, and then it drops right back down. Imagine being in that trade. Just 1 second. That's trading the news. That's some sort of news article. Let's just see what happens anyway here. Because like I said, I don't know. I don't know whether I should risk it or not, you know. Okay, let's do it. Let's do it. We're going to sell. Let's see what happens here. This is against my better judgment, because like I said, where you're going to put your stop here? Stop's too high. I want it just above here. That's really where I want my stop, but I'll put one up here just in case, so it doesn't spike up and completely ruin us. But here is where our stop is. That's where our mental stop is. That's 16 points. We're looking at 16 points, which is around this area here. It's against my better judgment, but it's a signal. 72.47. So we're looking around this area here to take some profit. You can put that there, but we always have to just look at it and monitor it. So let's have a look. But like I said, this is against my better judgment. It's a signal, but I don't like it. So let's have a look. Let's have a gander, see if it actually does what I think it's not gonna do, which is sell off. Because like I said, this money's here. Everyone can see this. Everyone can see it. Do you see what I mean? If everyone can see it, what advantage have you got? This is why I don't take these types of trades. Everyone can see it. But don't get me wrong, some of them have to work. Otherwise, no one will trade. Do you understand what I mean? Some of them have to work. Otherwise, no one will trade. So I don't know whether this one's going to work or not, but some of them have got to work. Otherwise, we'll just see, it's just a scam. We don't want to do it. Every time I put it in, it doesn't work. They told me to when you see a trend, go with a trend. Your friends, what do they say? The trend is your friend, etc., etc. All of those sayings they've got. You know how many sayings they've got for the market? They put so many different sayings and ways of doing things. But just think about this, right? Let me just tell you something. Do you think that good things in life can be gotten for free? Do you think you can get a house and a car and a swimming pool for free. So if you do think it, fair enough. If there's ways, that's fair enough. But if you don't think it's free, why do you think good information, valuable information is free? They put this stuff out on the internet, right? People sit there and create these productions and websites and videos and books, etc., etc. It's a lot of work, isn't it? And they putting out a narrative which is almost unanimous, saying where to put your stop, how to put your stop, how to do your market ratios, like for example, 2 to 1s, how to get your profits and stuff, where to take your profits. They put all of that. They sit down and put all of that in writing, in video, in audio, in visuals, everything for free most of the time. I'm not saying all the time, but there's a lot of free resources out there. Who do you think's putting that out? Do you think they're your friends or do you think they're your foes? Why would they put out information for free if it's going to benefit someone they don't know? For example, see the industry, the financial industry. The financial industry has got money, right? They have money. If this information that is for free is valuable, don't you think to protect themselves, the financial industry will put out counter information and stop that free valuable information from going out? Where is their side? Where is the financial industry's counteractive side or counteractive argument to stop this apparently free information from getting out to the common man? I don't see it anywhere. So it must mean, to me, it means that they're cool with that information. They're all right through that information. They have to do something to protect that industry. And the money that fuels the industry is from clients like us who are actually trading and losing money and putting money in the system. That's how they get money. That's why all these big companies set aside Forex and commodities. Look at the stocks, the stock market. You go to a business, a retail business, for example, a supermarket chain, who have got suppliers and they've got shareholders. Those shareholders are fueling those people's expenses. Look, it's doing exactly what I thought it would do. Look, see, I'm coming out right now. Look, I'm coming out. I'm gonna come out as soon as it closes. Once that closes, I'm coming out. Closes above that point there, I'm coming out. But the problem is sometimes it will go right up and then before you know it, it's gone too far. Do you see what I mean? So we've got, how much have we got left on this? We got quite a lot actually. 38% it's gone. So hopefully, I don't know, but like I said, I did tell you I don't like it. I don't like it unless it drops from here, then fair. But I told you I don't like it because everyone can see it. So it's more of a 50-50 trade as far as I'm concerned. It's a 50-50 trade. It's a 50-50 trade. And like if we had our stop loss here, see this stop? If we had a physical stop here, physical, yeah, if I put this stop here, we would have been out by now. But because we've got a mental stop, we've got kind of a bit of leeway to actually engage here and to see and just to kind of take off the heat and see if it does go past this area. But because of the spread, right, which at the moment is 2.8, but it's probably going to spread to 3. Because of the spread, that's why we would have been stopped out. We would have been stopped out because of the spread already. But let's see. We're about 20 points down. And there's quite a bit left on this candle. Unless the next candle, unless it doesn't go above this area, 1, and the next candle kind of dribbles down, we're coming out of this trade. Because at the beginning I told you I'm not really interested in this trade. As far as I'm concerned, the money's gone. The money's gone. Do you see what I mean? As far as I'm concerned, this 50 points has moved already. It's not, it might give us a bit more, but most of the time it would do what I said it would do, which is go what I was waiting for, which is it would go up to around this area here, right? Use this area here as a ceiling, then give us a signal about here, and then come down. You see what I mean? Maybe, maybe not. I don't know. Let's have a look. While we're waiting, let's have a look. 87% has gone on the candle. Let's have a look. I'm just looking to the left to see if there's any resistance on that side. There's a few, but it's more of, they're more ceilings than anything. No, sorry, they're more floors. They're more floors than anything. Look, a couple of floors there, here, and here. A couple of floors. Let's have a look. Right, it resisted that area, which is good, but it's above this. You see this moving average is above it. I don't like that. It should be below. This one should sink right below. Hopefully it will sink right below and come back down. I like this. I like the fact that it's resisted this area. Twinning with this candle here. This candle and this candle's been twinning. That's a good thing. But like I said, I don't really like these kind of trades. I like to be just, I know exactly what I'm doing, and I know exactly what I want, and I know exactly what I want to see. This one here, it's got the ability to do it, but it's fighting on either side. It's fighting up and it's fighting down. It's kind of not doing much, because as far as I'm concerned, it's done its thing. It's done it. Look, it's done its thing for now. It doesn't need to do anything else. People have taken their money out of it. The people who were on the nose, they've done what they had to do. They're fine. So let's have a look. All we can do is just wait and see what happens. But like I said, if it goes above here, which I'm expecting it to do so, if it closes above here, I'm jumping out. It's as simple as that. It's not a problem. It's not a problem at all. 14, 15, 20 points. It's fine. It does happen. And you have to respect that fact. But you can see how this could have been avoided, right? I'm sure you could see this. You saw the indecisiveness I had. Did you see the indecisiveness I had at this point? I was talking to you. I told you I'm not going to touch it because of this. And then when it came up, I was like, oh, let me do it. That's a human being. That's a human being right there. That's nothing more than human nature right there. You think you're missing an opportunity, but really you're not, because it's going to sap you. Do you see what I mean? And the fact that it's above this moving average, I don't like it. I don't like it at all. It's got to be below that moving average. It's got to close below that moving average. what's it now? Halfway through this candle. Halfway through. Let's see what happens here. Let's wait on it and see what happens. This is how it works, guys. You just wait most of the time. Keep your eye on it. And just make it just help you. But like I said, I have no confidence in this whatsoever, really. I have no confidence in it. And I'm glad you're here to see this. I'm glad you can see how anyone can make decisions which were not this like spur of the moment decision. Yes, you have to be quick and fast when you're dealing with this type of trade. However, that was not the right move. We saw that it wasn't the right move and we still took it anyway. The signal, that's a late signal. It's late. Watch, it's going to come up here now. Look. If it breaks this thingy, like I said, we got 90% on the candle. If it doesn't resist it again, if it breaks that line, I'm not interested. Really. Because it's doing what I think, it's doing what I was waiting for. 96% on the candle. 98%. It looks like it's going to close above that, 99%. Just closed above it. Unless it gushes all the way down right now, we have to come out. It's got to gush. It's got to come above, below this line. It keeps staying above it. Look, it's always above this line. It's got to come below it confidently. Nah, I'm not. I don't like that. I don't like that at all. Because nah, I'm not risking it. I'm not gonna risk that going because it might come up and touch this area here, this moving average here, and then come down. But that's risking 23, 24 points. Don't like that. It's got to gush. It's got to gush. It's got to come down like quite violently before we can say, yeah, we've got a chance. If it goes up anymore, we have to come out. I have to come out. As it's staying above the moving averages, that means it's on the bias side at the moment. So, do you see how it creeps up though? Do you see how it's creeping up? If it goes above, if it's like 17, 18, 18, 19, got to come out, my friend. So at the moment it's 17, 18. If it goes 18, 19, come out because that's how they get you. Because remember, it was 16, 17. I don't know if you were keeping an eye, but the points, minus points, was 16, 17. 16, 17. Now it's 17, 18. 17, 18. Right? If it goes 18, 19, come out. Because that's how it creeps up without you even seeing it. Because you're saying, oh, it's still 17, 18. But it's still 17, 18. And then it goes 18, 19, but it's still 18. That's how it gets you. It's still 18, but it's not. It's 18, 19. And then it would be 19, 20. And your mind still thinks that it's still okay because it's still hovering between one of the known numbers. See, look, 18, 19. You see that? 18, 19. You see that? Look, 20, look at that. I want it to go back down to 18. It doesn't do that most of the time. It don't do that. If it goes back down to 18, nah, see, look, it's gone to 21. Do you see how quick it's gone? Do you see how it can cause a problem if you are slow? Look, it's gone all the way to 22. Now you're 22 points down. Now you're in the market. You're like, oh my God, I'm 22 points down. Let me stop. Let me come out. I'm coming out now. You have to come out, my friend. It's doing what I was expecting it to do. Come out, because now it went from 17. It went from 16 to 17, right? Then it went to 17 to 18. And I said, when it comes out, when it gets to 18 to 19, I'm coming out. But what it did, it went to 18 to 20 straight away. And then I'm like, oh my God, let it regress to 18 so that I can come out. It didn't regress. It went to 21, 22. Do you see it? So sometimes you have to, if it doesn't give you what you want, you still have to come out, because I was waiting for it to come back down to 18. It wouldn't do that. It wouldn't do it. And you have to jump out. You just have to do it. So that's 20 points just gone just like that. Yeah? 20 points just gone because, right, you didn't listen. And don't get me wrong, this is probably going to come back down, but we can't afford that. We couldn't afford the risk. This happened. The reason why we lost that trade is pretty simple, right? You heard me in the beginning. I told you, I've already analyzed this market and said the money has gone. The money has gone. This signal is a late signal. Let's not do it, right? But once the signal came, I still went for it, knowing that is a 50-50 chance. I still went for it. Watch, it's going to gush down now. Now that people have come out, it's going to gush down now. Look, watch. And this happens all the time. All the time. You didn't hold your nerve. Look, look, look. Watch. All the time, my friend, this happens. This is what I was waiting for it to come below the moving average. This is good, but I cannot wait for that. I'd rather take the loss and wait for another better trade than this. Because this trade wasn't a good trade, and I knew it wasn't a good trade when I analyzed it, and it turned out to be a bad trade. All right, let's have a look. What's going to happen now? Look at that. It's doing what we wanted it to do. Remember, I told you it would resist this, but we couldn't afford it. Resist this part here, and then it will come down. But we couldn't afford it. We couldn't afford it. We can go back in now, but I'm not interested in that, because you're chasing now. You're chasing. You will be chasing. So I'm not gonna do that, even though it's probably gonna do what we were anticipating it to do in the first place. But this is the market. This is how it works. Even when you know, sometimes you just screw up. Look at that. If we just waited for a little bit more, look at that. And that's the thing about the market. It knows where your thresholds are. It knows that, oh, 23 is too much. Do you see what I mean? How did it know that 23 is too much? How does it know that 23 is too much? You stopped yourself out of the market. You can see it. I told you that 23 was too much. 23 points is just too much. I'm coming out at 22. We came out at 22. As soon as we came out, look what it's done. As soon as we came out, it done what we are asking it to do all that time. Wow. Markets is something else. But let's just see if it will actually reach this area here. Anyway, guys, I wanted to show you that is what you can, that is what I will classify as an avoidable losing trade. It's an avoidable losing trade. The only reason which we lost that trade is because we didn't stick to our policies. We didn't stick to what we know works 80% of the time. We done a 50-50 toss of the coin trade. That's what just happened just now. That's a 50-50 toss of the coin trade. That's what that is. And now we're going to be fuming because it's going where we want it to go. Me personally, yeah, I'm a bit cross with myself, to be quite honest. I'm a human being. I'm a bit cross with myself because that was way avoidable. It's just avoidable. We should have waited for this because remember, this is exactly what I said. We want it to come up here a bit. Look, this is where I said I want it to come up around this area here. Use this as a ceiling, right? And then come back down. That's what we were looking for. However, this candle here is too much for me as a signal. It's too big. It's way too big for me as a signal. But if we, like I said, this area here, this kind of coincides with it because it's using this moving average as a ceiling. But it's almost like timing is key because we should still be in this trade here and just gain. We should be in this trade now on a plus. Let's see what happens now. It should drop all the way down to, well, I don't know, but it should drop down to where we want it to go. So it shouldn't go about above here, and then it should drop down. But we're out of the trade. It's a losing trade, and it was an avoidable losing trade. That's the worst part. It was avoidable. We saw this move. We saw it. We saw this move. We said it's got too much. It has to go up a bit before we can go in. It went up a bit. It's giving us a signal. But me personally, I still wouldn't have taken this signal either because this candle is too large. 19 points. If it was this size, 8, 9, 10 points, I would have went in for it. So, for example, if this candle stopped around here, but passed, like if this curved up a bit, this moving average curved up around this area here, and it passed it and gave us a little signal, that would have been beautiful. But this trade entirely is not for me. Now, just look, it's hit the hour mark. Let's have a look what it looks like on the US oil hour. Look, on the US oil hour, it didn't even give a signal again. The signal that it didn't close. Look, it didn't close. Remember, earlier it was giving a hint of a signal, but it didn't close on that signal. So there's no signal on the hour mark. People are looking for it to go down, like follow this trend and go down and give us lower lows. But it might happen, it might not. It's been going down for a minute. Look at that. Look how long it's been going down for. Look, it's been going down for 2 weeks. It's a long time just going down. So I don't know whether that's possible for it to continue to go down or whether it's going to fluctuate or not. But that's how it works, isn't it? That's the way it works. Let's just have a look and see where it pans out. I will pause the video and then we'll get back to it and see where it pans out. See? You see what it's done now? It's done exactly what we said it would do, but we didn't, one, we didn't stay in when we should have stayed in. We should have stayed in a bit longer. And two, I think we came in a bit early. I told you this is a bit early. It's gone too much. It has to go up before it comes down. We didn't want to do that. We waited here, took it, waited for it to go against us too much, and then we came out. But look, it's done what we wanted it to do. 16 points. It's giving us 10 at the moment, but it's going the right direction. So, like I just said, this is what you call an avoidable trade. Look, avoidable losing trade. Look at this. It's already given us a new low. So it's looking to hit that line. This is our line. This is where we want it to be. So you can see that even when you are right, you can still be wrong. We thought it would sell. It sold off. But because of the stop loss, where we put the stop, we lost. And I know people are going to be saying, oh, you don't know what you're doing. If it was me, I would have done X and Y. There's so many gurus out there. I'm telling you, there's so many armchair gurus who think they know what they're doing. But if they knew what they were doing, right, they would know that what just happened happens. They would know that my explanation for it happening is correct, because you are a human being. You are not an android. And the fact of the matter is that an android still will get it wrong, because they can't see what we can see. They do mathematical, because that's the problem with trading. It's not just mathematics and it's not just art. It's a combination of both. So an android will not be able to do trading, as far as I'm concerned, unless it knows art, unless it can feel and predict and not predict and has a hunch. It has a gut feel, not even a gut feeling. I don't even look. See, it's done it. It's done what we wanted it to do. It's done what it's. But we are not in the trade. We lost the trade. Now, how is that possible? You might ask yourself. How did it do what we predicted it to do, but we still lost? How is that possible? But it happens all the time, because I came in too late or too early. If I came in here, it would still owe us a bit of money, so I wouldn't have done that. But here, I suppose my stop was just too much. It was too less. Really, my stops are at 30 points. That's really where my stops are. But I was going on 20, 18, blah blah blah. That's what I was going on the stops for. I was going on an 18 stop, because see, it doesn't even work out. But yeah, that's where I'm at. That's what happened. You could see that if we stuck to our guns, we would have been all right, but we didn't, and we are not all right. We lost that trade. Yeah, so this is just the nature of the beast, my friend. This is what happens day in, day out. It just doesn't, it don't go exactly where you want it to go, but it does. So you can lose even though you are right. So that's why it's such a tricky market, because you can lose even though you are right. We were right. We thought it was going to sell. It sold off. But because of where the stop loss was, we lost. Do you see what I mean? You see me, I'm coming out. I should have stayed in just that little bit extra. Not even, what was that? Not even up to a minute later, it switched on us in our favor. It's almost like it knows an average of the human's thresholds. It knows the thresholds averagely. So because it knows that at 36 degrees centigrade, people are going to be coming out of that room because it's too hot. Most people will come out at 36, 35 they can tolerate. 36, everyone's coming out. There'll be a few die hard, but most of the people will come out of that room. It's almost like that's how the philosophy they use for trading. They know that if it goes up this amount, most people will come out. Do you see what I mean? If it goes up this amount, most people will come out. And that's what they've done. And now it's just going about where it's going to go. Anyway, until next time.